Hey there, Ryan Walmsley, American Pacific Mortgage. I put together this quick video to go over what happened with inflation this week. Today is Friday, April 14th, and there was some big movements in inflation and wanted to talk to you about how it affects the mortgage market. And specifically, we're talking about consumer price index. That's the number that came out on Wednesday this week. And why is consumer price index or CPI, why does it matter to housing? Well, the main thing that we look at in housing is it's a key driver of mortgage rates. So when we're an investor is looking at in borrowing hundreds of thousands of dollars for 30 years, they want to make sure that their investment pays off, and inflation actually erodes the earning potential of mortgage bonds. So inflation is very important to mortgage rates, and it's not the federal funds rate like you hear when the news talks about interest rates going up. Now, mortgage rates drive housing demand. More demand increases home prices, and home price appreciation is good for the housing market. So now, breaking down CPI, basically we saw a huge drop from 6% to 5% year over year. This is the headline number. This is the all-in inflation number. But the core CPI number actually went up, and that's a little bit concerning to the bond market because it's housing related. The shelter component of core is the largest component. It's 43% of the core CPI, and the Fed is very concerned with home prices going up because it is such a large part of inflation. So when the bond markets see that core is still going up, they think that the Fed still has more work to do, and it could prolong rates being a little bit higher. But it's lower inflation in the long run is going to be good for mortgage rates. And let me just break down the shelter component here. So of the 43%, the big players in that is rents, what people pay for apartments and homes, and then owner's equivalent rents, which is basically what a homeowner could get for rent if they listed their property as a rental. Now, these numbers went down, but this lodging away from home actually went up significantly. And lodging away from home is basically hotels, motels, and the prices that those types of lodging is getting at this moment in time. Well, if you tried to book a summer vacation or anything like that recently, you know that hotel prices are pretty high. They have been in the past. We've kind of seen some volatility, certainly over the COVID years, and now we're still seeing potentially some revenge spending, revenge traveling. China's opening up. We're having more demand coming out of China. So this lodging number is higher than what we would like it to be. It actually pushed shelter up to 0.6. I mean, and it's only 1% of this number. So because of that, core inflation did increase, but we do know that inflation as a whole is it's coming down. So let me show you that here. So this is the core CPI over the last 3 years or so. And what we're seeing here is this run up in inflation and core inflation, but now we're starting to see this crest happening where we've reached the peak and we're starting to see this core inflation come down. And really, we expect to see it come down even more so in the future because the comparables year over year are going to start to be more difficult or better comparisons from last year to this year. We know shelter costs are significantly lower based off of current surveys that are done. The real-time data is showing that rents are significantly lower, or the percentage of increase is significantly lower than it was just a year ago. And at these moments last year, we started to see these higher numbers last year, and these replacement values are going to be easier to show improvements in core CPI in the shelter portion specifically, and we expect this inflation number to come down significantly in the summer months that are coming up, starting May 10th with the CPI reading next month. So wait and see how that plays out, but we still have to take into consideration what this lodging number is doing to the core inflation. So we've seen this it's pretty volatile, but it always seems to come back to this zero line. It's elevated right now, and as we start to see, as we expect to see a reversion to this line through getting through this revenge type spending or just moderation in traveling, we're going to see this lodging away from home come back down to this zero level, and that certainly will help aid the core CPI level coming down, which will in turn help the Fed justify pausing any future federal funds rate hikes and potentially even reverting sometime in the distant future, near to distant future. The Fed certainly won't commit to saying that there's going to be any rate drops this year. We'll just have to wait and see how this all plays out in the broader economy. But let's go back to the graph here showing what did go up in the consumer price index. So we did see airline fares increasing at a pretty high clip. Although they're down year over year, still high month over month. And then vehicle insurances up slightly, and then pretty flat year over year. We did see used cars come down. This is deflation here, and it's not, prices are not going up. Used cars and trucks, the prices are coming down. But that's probably a byproduct of higher interest rates on auto loans. So there's a lot of people having monthly payments of $1,000 or more on a used vehicle. So this is indicative of higher interest rates, and we expect that trend to continue, helping bring inflation down in the future, helping bring down mortgage rates moving forward into 2023, and certainly supporting home prices with more demand. And that's pretty much going to be the story of the second half of the year. So if you have any questions for me, feel free to give me a call. You can call or text me on this number, email me at my apmortgage.com address. You can download the mobile app here, and you can follow me on Facebook or like and subscribe to this video. Give me a call if you guys have any questions, and have a great day.